pact. On Friday, Sheikh Mohammed bin Zayed Al Nahyan announced a $30 billion commitment towards climate finance through the new Altera Fund. With this $30 billion commitment, Altera becomes the largest climate investment vehicle for climate change action, as it will aim to mobilize US $250 billion globally by 2030, with an emphasis on improving and facilitating the flow of climate investment into the global south. We've also launched the Global Climate Finance Center, an innovative center in Abu Dhabi that will provide thought, leadership, advocacy, and research to develop sustainable financial markets focused on climate change. These are the first, but we hope, important steps. The independent high-level expert group report, coupled with the UAE initiatives, represent a building block that will allow us to build together on solid ground. However, many challenges remain. This is why I'm standing here in front of you, asking you to do your part. We need to build upon this comprehensive framework with critical elements that can move it forward. Let's not waste time. I invite you to start immediately in today's working session and to come back with concrete plans of action. We'll have a chance to see where we stand on these actions at the spring meetings, and we will take stock in progress at the Finance Forum, which we will host at Abu Dhabi Global Markets in Abu Dhabi in 2024. I want to thank you all, and again, apologies for being a little bit late.
Thank you so much, Majid, and it was worth the wait, and thank you for Rania for stepping in. Well, the next speaker really needs no introduction, and that's why I was honored to be summoned by her a year and a half to Barbados to join the Bridgetown Initiative, which is really the conversation that has kick-started a lot of the big coalitions that have been coming together to amplify the voices of the most vulnerable countries that have for too long been on the side of the finance conversation. And huge congratulations to the Prime Minister and to all of the climate vulnerable countries here represented and the deeply indebted countries for really shaking the system with clear ideas, moral clarity, and practical solutions. So over to Prime Minister Motley for your opening remarks. Thank you.
Thank you very much, Kate. And let me say that I want to thank all who have been walking this journey across the world, because more and more it's becoming clear that the same principles that I enunciated when we came to government are equally applicable to the world today. How do we share the burden and share the bounty? How do we ensure that each person or institution or country can play their role in saving the planet? We're talking about finance because that's the oxygen, but it's not the destination. The destination still is the change of behavior or the execution of projects. To that extent, therefore, you better appreciate, while we give thanks for the considerable progress made thus far, we understand and appreciate that we still have a distance to go. And the clearest way of reaching that distance is ensuring that philosophically we're on the same page, even if we have differences as to the modalities of getting there. I want to thank Nick and Vera and the rest of the committee for continuing the great work of giving us the roadway, the pathway for how we get there. The bottom line is that 18 months ago, when we started Bridgetown Initiative, Kate, there was no Resilience and Sustainability Trust. There was no debt pause clauses, natural disaster clauses being accepted. And I keep saying this morning that no country or entity will give our country 20% of GDP in the event of a crisis. That's what the debt pause clause does for us, and it's purely on the basis of a legal construct that is not in any way altering or diminishing the rights of the lender, but gives us the fiscal space and the cash flow to do what we have to do. And to that extent, I want to salute President Banga for accepting that for the clauses to be meaningful, they can't be for prospective debt, but for existing debt, and I thank him for being responsive to our calls in that respect. I want to thank him as well, because I keep calling for the global methane agreement, because while we talk about adaptation and loss and damage, let us not forget that the objective is first and foremost not to reach 1.5 consistently, not to reach that above, and we know that the science is that the best way to do that is through controlling methane. I welcome the voluntary agreement, but the truth is that this is not the first time that people have committed to doing things voluntarily, and they haven't done it. And we don't have all the oil and gas companies at the table, so I make the call again for a global methane agreement, because if we can go with warp speed to create a global minimum tax, which my country has now had to adjust to 3 weeks ago with our reform of corporate taxes, then we can do this by getting, one, a global framework for methane, and two, getting also an understanding that if there is not enough money, truly, and I accept that, public money, to fund both loss and damage and adaptation, well then let us make sure that we give everybody the opportunity to pay their fair share or to transform their behavior. In the case of farmers, they may not be able to pay, they need to transform their behavior, whether it is with livestock or rice paddies. In the case of persons who are capable of paying, like oil and gas companies, make 95% look like 100% and leave 5% of the profits on the table. In the case of philanthropy, spend 95% and make it look like 100% on what you like, but leave 5% for what the world needs. In the case of individuals traveling, spend $5 on domestic tax to play your part, and spend on domestic travel, and spend 10 on international, and if you're traveling business, 50, and if you're traveling first class, 100. The point is that we can get there if we accept that unless people have a plan that is credible to live on Mars, then everybody has to play their part, either through change of behavior or contribution from their pockets. And therefore, I believe that Vera and Nick's report give us a clear blueprint for how we can ramp up a lot of what we're doing. Similarly, we need to remove the unconscious bias, and we need to remove the premium that exists for lending to the global south. You have to lower and level the cost of debt if there's going to be a just transition across the board. Without that, we'll be talking about this for a while. And then I want to thank UAE for having the courage to establish the Altera Fund, and to say to you that even as you seek to ramp up to the 250 billion, what is going to matter, as I keep saying to Dr. Sultan, is no longer promises, as you have accepted, but indeed record. And record, therefore, means that even if you start to disperse within the first 30 billion by next year, the world needs that to know what is possible, rather than waiting to scale up when we get to 200 or 250 billion. I want to salute the recapitalization of the GCF. I want to thank the Americans and for stepping up to the plate and ensuring that the 3 billion is going to count significantly in that. And to say to others that essentially, if we work together, the missing link more than anything else in this room now is global leadership. We cannot have the disparity between leaders and their shareholder representatives in the World Bank and the IMF and the other multilateral development banks. We need to unlock the domestic savings, as we're hearing here, and that means in many instances changing behavior at the national level, which means having difficult conversations with our citizens, because our citizens are rejecting the fact that they may have to carry higher costs without understanding that the higher cost is in fact the way in which they're saved from serious loss and damage as we go forward. So I'll stop at this point and simply say thank you to everyone. It is clear to me, however, though, that there has to be a philosophical approach towards the acceptance of long-term lending so as to avoid the false dichotomy between people and planet. And secondly, that we need to have a very serious conversation about the future of the insurance industry, because governments are being forced to step in, and that's why the debt pause clauses are so critical, because it gives us the capacity to be able to meet the demands of our population who are uninsured or underinsured. And the true tipping point for me as a head of government is how do we avoid our countries and our regions becoming uninvestable and uninsurable. And to that extent, I hope that Bridgetown 3.0 therefore will focus on the deeper philosophical change as well as the future of the insurance industry, because without a functioning insurance and reinsurance industry, the global economy will potentially collapse. Thank you.
Thank you, Prime Minister. I'm now going to hand to Professor Nick Stern and Amar Bhattacharya, respectively the co-chair and the executive secretary of IHLEG, to present the report.
Thank you very, very much, Kate. Thank you to the Presidency, Dr. Sultan, Ambassador Majid, for asking us and supporting us during this work. Thank you to Egypt, which was so positive in the first report and in the second report, to the climate champions, and Mahmoud, who I hope will be here, will speak later. That kind of spiritual support, analytical support, has been enormously important to this work, and we're very grateful. Thank you to Rania and Mia for their tremendous leadership on all this. I can't resist, as a professor at the London School of Economics, saying that you really ought to understand that Prime Minister Motley is a graduate of the London School of Economics, and we are enormously proud of her in so many ways. So thank you to you all. Thank you to the group, the Independent High-Level Expert Group, many of whom are here. And I'm sure I speak for Vera in saying that. And thanks also, again, with Vera, to Amar and Eleanor Souberin, who did so much of the all sorts of things, the heavy lifting, the strategy, the guidance, the analysis. Enormously, they've carried a huge load, Amar and Eleanor. Thank you, Mattia, for making all this happen here today, and for so many other things. Now, what did we try to do? Well, we said, look, finance is for something. What's finance for? Finance is for, in large measure, investment. What is the investment for? Investment, in our rubric, and because it matters so much, is for delivery on Paris. But that same investment, in so many ways, drives us towards a new and much more attractive model of growth, development, and poverty reduction. One is sustainable, works for people and the planet now and in the future. There's tremendous upside here to getting this right, not simply in reducing the risks, but also in setting us off on something different. What does that investment have to cover? It has to cover an energy transition which is just. It has to cover adaptation and resilience, loss and damage, and importantly, conservation and restoration of nature and natural capital. That is what the investment is for. And all those things are in Paris. When we say delivery on Paris, we mean all those things: just energy transition, adaptation, resilience, loss and damage, and conservation and restoration of nature. So you look at geography and sector, what investment is necessary to do that. And we built on past work, particularly with Amar and his colleagues, on the geography and sector investments necessary to do that. When you do that, emerging markets, developing countries outside China, which doesn't need the finance, terribly important, but it doesn't need the finance, you come to a flow of investment that is necessary in 2030 in those countries of around $2.4 trillion a year. That's what's necessary to deliver. It's not some aspiration, it's not some bargaining chip or first bid. It is saying, if you want to deliver on Paris, that's what you have to do. And then, of course, that is differentiated, all sorts of different kinds of investment in that, from generating renewables to grids, to our forests, and restoring degraded land, and driving past coal, and looking after people in places where suffer dislocation, and so on. Those different kinds of investments need different kinds of finance, and how they're put together is enormously important. They also, of course, if you're going to get the investment moving, you have to have an environment where investment can take place and is encouraged. Whether you follow Keynes or von Hayek, I hope you follow both, investment is about expectations, it's about confidence. And this is not any old investment. This is investment that is directed to deliver something we all desperately need in terms of delivery on Paris, and a new form of investment. So you need the right kind of policies, and you need policies that generate confidence. So, and you need, of course, the debt management and a fiscal space which will allow you to do that. So those conditions for investment are varied, important, and crucial, and they have to be there to draw the investments through. And we all have to work together to make that private sector, governments, MDBs, civil society, to create those, and the IMF on the debt and so on, to make those conditions right for the investment that we have to generate. But then it needs to be financed, right kinds of combinations. Now over to Amar, the finance.
Thank you, Nick. So as you underscored, we need finance of all kinds, but we also need finance using their complementary strengths. And that's very important in the bargain that we have to achieve. And the four big pools of finance that have to come together are domestic resource mobilization, private finance, MDBs, and highly concessional finance in that scale, because that's going from the largest to the smallest, but the most important in many ways. And how does that agenda then need to move? Domestic resource mobilization is foundational because it really is ultimately the basis of long-term sustainability. You can't do anything unless you have the domestic resources. We know that we can do more on the tax front, especially with the power that we now have of digital options that are available. But we also know that we can get a lot if we, in some sense, get the gains from eliminating harmful subsidies and repurposing them. So this is something that I say, we have to start with, which is all countries have to take ownership for that. Second, we all know that private finance is really critical. We are doing reasonably well with domestic private finance. We are not doing well with international private finance, and that's why the kind of initiative that was mentioned by Ambassador Majid is so important. Just to put it in numbers context, at the moment, CPI numbers, other numbers show we are perhaps, having international private finance for climate is in the order of 15 to 25 billion. It needs to be around $500 billion. We need to create a new highway for private finance where it isn't about blaming the other side, but coming together in a purposeful way of co-creation of investment opportunities, of tackling the policy and institutional constraints, creating investable pipelines, and doing risk mitigation in an end-to-end model. The report points out the ways in which it could be done, but what I am really struck by, including here at COP28, is how much excitement there is around this agenda. And Altera is a great way to kind of bring some focus. We do not need passive funds at this point in time. We need activist funds that are searching out investment opportunities and that bring finance with them. The MDBs have a critical role to play, and the MDBs have actually put an agenda forward, but we all need to be then accountable for that agenda. Third, we call for an agenda on MDB reform that is built on the giant shoulders of the work that Dr. N.K. Singh and Larry Summers did, and that he will speak to later. But the MDB agenda is at center stage. And the MDBs really have three critical roles. They are the best partners to help countries scale up investments, as the NOAFE program shows. They are the best partners to the private sector in bringing private finance at scale, a very different model, although. And third, let us not forget that they are the most efficient form of international public finance that we have. We just need to, make them more effective and deploy that finance much more effectively. Last, let me end with the point about concessional finance. There's a lot of pressure on rich countries, developed countries to deliver. I think that is fair, but we are not going to generate the amount of resources that we need unless we find predictable sources of concessional financing. And I want to build on what Prime Minister Motley said. There are two ways in which we can generate more predictable finance. One is to tax the bad to create resources for the good. And you can do it in multiple ways, okay? But we know that there are many things from, fossil fuel, from high-emitting sectors, and that's a very powerful way to generate predictable resources. We don't all agree on the means, but we need to have the discussion around which international action can happen. And the second is, we know that in a world where there's plentiful of money at the level of rich individuals, at the level of corporates, at the level of individuals, we can generate a lot from voluntary contributions. Voluntary carbon markets, SDR rechanneling, and structured philanthropy. So I think if you think about it like that, we can develop an agenda that generates the most scarce resources and that leverages other pools of finance. So coming back to where we started, the global stocktake is sobering, but it is particularly sobering because we are falling behind in emerging markets and developing countries. In the renewable energy transition, only 7% of clean energy investments in the last 4 years took place in emerging markets and developing countries. We are falling behind on adaptation. We are falling behind on nature. 90% of the natural capital is in the developing world, 80% of the expense in the rich world. Okay, I'm now closing. So I just want to therefore end on the theme of this report. It's all at this point about acceleration, implementation, and delivery. This is the moment, and the next 2 years are going to be absolutely critical in that. Thank you for your indulgence.
Thank you very much. I would just now ask, I'm afraid His Excellency Majid and also the Prime Minister have to leave to another engagement, so please give them another round of applause as they leave for their huge contributions. Thank you so much. We do have a lot of speakers to get to. Don't avoid my eye contact. If I lift up my finger like that, it means you've already run over the minutes that you have. I'm afraid that Shamara has to leave a bit early, so she will come in after Odile and before President Nasheed, if that's okay. I'm now going to hand over to the President of the EBRD, Odile Renaud-Bassot.
Thank you very much. And I really want to commend the high-level expert group for the report and for the global approach. And I think you bring on the table a lot of, first of all, the overview, but a lot of very good analysis and proposal and giving a clear sense of direction. MDBs have clearly an important role to play. Amar just said it. We are, for the time being, among the largest providers of climate finance. We have been increasing. Last year, we've increased by 20%. So we are on our way, but it's clear, the report puts that very clearly, that much more is needed and the challenges are huge. I would like to focus on two areas you mentioned, which are quite highlighted in the report. The first one is domestic resource mobilization. And you mentioned the fiscal dimension, so the budgetary policy dimension. I think there is another dimension of domestic resource mobilization on which MDB can play a very important role, which is the financial sector. The working with the local banking sector in order to, developing appropriate financial market regulation to ensure that the local savings are invested in the country and to avoid the exchange rate risk. Developing countries cannot finance climate transition in foreign currency as a whole. The exchange rate risk is much too high for the fiscal balance sheet and the risk on the current external accounts. So there is a lot that can be done with working with the local market, strengthening the regulation, working with domestic banks. And for example, at EBRD, we've been developing a Paris alignment framework for the local bank in order for them to look at their investment and the way they finance local business through the lens of Paris alignment. And that's a way to really bring the local investment in consistency with Paris alignment. The second big part of the report is, of course, financing. And it's clear MDB, you put the objective MDB to triple, concessional finance to triple, and private sector finance to multiplied by 15, which where the gap is the highest. For that, we can also contribute a lot, but there is a long way to go. Policy work, project preparation, and de-risking, in my view, are the key elements. We work on that, but we need to partner with the private sector in order to demultiply. I will stop here. A lot to be said on country platform, which we are big supporters, but thank you for your input. Thank you very much.
Thank you so much, Odile. Thank you for graciously keeping to time, and thank you for raising the issue of country platforms, and thank you for focusing on practical implementation. I'm now going to hand over to the CEO of the Macquarie Group. Where is Shamara? Oh, hello. Over to you. Thank you.
And thanks for letting me go early. I first want to thank the presidencies of COP27 and 28, the UAE and Egypt, for commissioning this report, and thank the IHLEG for the report. It's important to identify the steps that we need to take and agree. It focuses a lot on the finance sector and what we need to do, domestic mobilisation, international capital, MDBs, etc. I think the other aspect is we, the finance sector, only act through catalysing the real economy, and the big thing we need to do to access all this funding is work with the real economy to provide investable projects, because all this money, be it domestic savings or international, is looking for appropriate return for risk, and it's the savings of individuals, nations, etc. So we need to de-risk these projects, and I think the report identifies the catalysing role that the MDBs need to play in this: first loss positions, guarantees, securitisations, FX, etc. And Ajay Banga was mentioned by Her Excellency Mia Motley, doing an amazing job streamlining this. But I think what we in the private sector need to do is then take this funding and develop the bottom-up projects. And apologies, the reason I had to run is that we're launching with the Mexican government a project in Mexico called Pacifico Mexinol, which is a good example of this, where the developed nations are forcing shipping companies, and the International Maritime Organization is to go from LNG to methanol and create cleaner fuels. And what we're trying to do is build an industry in Mexico to deliver blue methanol and e-methanol. The IFSB is playing a fantastic role with us here, both technical skills with the Mexican government, shaping a project, but also bringing first loss funding and debt and equity. But ultimately, and we're providing the feedstock and the offtake to sell to shippers. But this is the sort of stuff I think we need to get on with over the next couple of years, is taking these structures and financing. And, we're doing projects in India in heavy vehicle e-mobility with the Green Climate Fund to create real investable pilot projects that can then scale, accessing the huge pool of money. If we're going to, lift the 2.4 trillion we're saying we need at the moment for the emerging markets and developing economies, is access or catalyse these private pools through pilot projects. So we're looking forward to working with everybody involved in this. There's multiple players at the table: governments, MDBs, domestic capital, international capital, etc. But we're just going to have to get on with step by step building the pilots. So thank you.
Thank you so much, Shamar, and thank you for keeping to time. I'm now going to move. Congratulations, President Nasheed, on your appointment as the V20, and over to you for 2 minutes. Thank you.
Thank you very much. And firstly, we'd like to thank the expert group who came up with the report. As you mentioned, ma'am, since the day before yesterday, or since last week, I was the Speaker of the Maldives Parliament, and then I resigned, and I'm happy to take over this new job as the Secretary General of the Climate Vulnerable Forum. We are going to set up our shop in Ghana, Accra, and we hope with Prime Minister Motley as the incoming chair of the presidency that we will be able to move forward with our programs. The CVF is a group that now has 68 countries, representing 1.74 billion people, the voice of the vulnerables. The expert group, whose report we have heard just now, is tackling what I see as the most fundamental issue facing climate today, which is, where is the money going to come from? In particular, if you are asking the low-emitting countries such as the CVF nations to not become big emitters, they must have a strategy for economic growth livelihoods and prosperity, which is entirely driven through a modern economy powered by clean energy and clean technology. We need to triple international development assistance and expand access due to climate vulnerability. This is an issue of both justice and pragmatism. For justice, we never became big emitters. We are giving away our climate space in carbon budget to the countries which have already used the atmosphere for free. The V20 Fair Shares report found that CVF countries already aligned with 1.5 degrees, but most developing countries are not. This is unjust, and the only recompense is if rich countries provide the finance for us to develop a clean direction towards prosperity. Currently, we are hampered above all by the debt crisis. Our nations need urgent liquidity support, or we will see more vulnerable countries in the kind of distress that has happened to Sri Lanka. You cannot focus on climate strategies when people do not have enough to eat and the countries are unstable. The CVF countries have 500 billion of debt coming due in the next few years. So instead of capital inflows, we are seeing capital outflows, mostly to the high-emitting parts of the world. As we often say in CVF, the fate of the most vulnerable will be the fate of the world. The debt issue must be addressed, and for this, we need to activate participation of MDBs and also thought leadership, such as from this expert group on creative ways forward. The World Bank's debt pause is welcome, but must be broadened from the 45 states to include all of the climate vulnerable countries. The World Bank and IMF must integrate climate issues into debt sustainability analysis methodology, or you are only seeing half the picture. The common framework is not delivering and needs urgent overhaul. The Paris Club should lead the way in offering deeper haircuts. Countries must be granted an automatic standstill when they seek relief through common framework to encourage them to participate. The CVF countries are not just victims in the climate picture. We plan for climate prosperity and have a program of climate prosperity plans which are already underway in several countries. These plans are bankable and will give good returns on investments. These plans outline the project level, the investments needed in different sectors, from energy to transport to agriculture. Ghana, Sri Lanka, Bangladesh have already completed prosperity plans, and more are underway. We estimate there is a 10 trillion investment need for CVF countries for the remainder of this decade. We have been thinking about how we can work with MDBs and others towards a new asset class of de-risked bonds which bundle investment in CVF countries in a way which lowers the cost of capital and raises the 10 trillion. We have a concept note on this. I would be happy to share it with you.
Thank you, Mr. Nasheed.
Yeah, just give me one more minute. I was very interested to see the World Bank has begun thinking along similar lines. With assets class of investments where large pension funds and other capital providers will find attractive places to invest. We need to move quickly from billions to trillions. In this conversation, we need to ensure that CVF countries are not locked out of investment flows because of debt and high capital cost. To conclude, I can assure you today, CVF member countries do not want high carbon development. But development itself is non-negotiable. We can't ask our people to be poor. We will not trade off poverty for climate stability. And clean development will need the world to pay serious attention to investment needs of the climate vulnerable. Many of you here are leading this conversation, and I stand ready to engage with you. We cannot have 1.7 billion people in this room, but the voices of the vulnerable must be heard. Thank you.
Thank you, Mr. Nasheed. and thank you for all the work that you're doing. I'm really sorry, but what usually happens at these things is people start having to leave, and then the most patient gets squeezed. I have been told that NK Singh needs to leave before 1. Mr. Singh, are you happy to wait for Alexia to go first, or do you need to run? Oh, it's okay. Okay, you don't mind? It's up to you guys. Okay, Mr. Singh, over to you, please. Thank you.
Well, thank you very much. First, let me say how honored I am and privileged I am to have received this invitation to be able to say a couple of things here. Let me begin by congratulating the expert group, the great work which has been done under your leadership, Nick and Amar, supported by a very distinguished group. One thing, of course, struck me as being really, in some ways, very happy coincidence, that many of the members of our independent expert group had a sort of common membership. We were privileged to have Veera, privileged to have Nick. Amar was a key advisor. So I'm not surprised, therefore, that there is a great degree of congruence and convergence between the recommendations made by the high-level expert group, your chairmanship, Veera and Amar, and the recommendations which we have made. So let me begin with that. Second point which I wanted to really make, that Amar, you were absolutely right, that the heart of the matter is, can one get private capital going and moving in much faster? And what can one do to de-risk and incentivize large private capital flows? We have made some suggestions. I'm happy to share with you, President, that in our expert group, we made 30 very tangible recommendations. Each are quantifiable, each are monitorable, each can be assessed over a period of time. Two areas I want to mention on particularly. One is an area that as we have made progress, and incidentally we have made considerable progress, to people who are skeptics that we have done nothing, I'd be happy to circulate, but even since the dialogue began about less than a year ago, on each of these points there has been significant progress. There is, of course, challenges which remain to be addressed. I want to emphasize, for instance, on the de-risking of use of guarantees, on, for instance, de-risking the issue of foreign exchange fluctuations, mechanism for hedging, establishing, for instance, organizations like the TCX, both for onshore and offshore, and the manner in which MDBs can really act as a family and reinforce each other. And that is really significant. And therefore, I would really say that this privilege to be here, to see the huge amount of progress which has been made, and the multiple challenges which lie ahead. With your permission, Mr. President, I will seek your indulgence that some of the things which I wanted to say, I understand, there's no time, we'll have it circulated for whatever purposes of record. Thank you very much for allowing me this opportunity and this intervention.
Well, no, and thank you, NK, for the extraordinary work you've done leading the expert group. Those recommendations are indeed timely. We have about 8 more minutes in this room. We have 3 more speakers, and I also have to preside over the MDB president's thing in Al-Waha, so I'm probably going to have to leave early and hand over to Vera, or Amar is going to do it. Okay. Alexia, I see you quietly working through the issues in almost every meeting I go to on finance, so thank you, and 2 minutes for you.
So humankind, I think, has showed an amazing ability to innovate, to adapt the way we live, the way we work. We are now facing our greatest test. Thank you, Veera. Thank you, Nick. I think you're preparing us for this test. We need a systems mindset. We need to put to rest, as Prime Minister Motley said, the idea that climate and development is at odds. They're together. That's the only way we're going to get there. We need to break silos. It's whole of government, whole of society. and we need radical openness and collaboration, data and science as our guides. Finance with purpose is critical. A lot has been said about the role of the MDBs. I do want to congratulate them for stepping up by $10 billion to be $60 billion worth of financing, which means the $100 billion, which is not enough, but important for symbolism and for trust, has been, I think, reached. So that is important, but much more work to be done on reform there. We need to use existing financing better and make it easier for countries to access it. And so with the Brazilian presidency, with the Italian presidency, looking at the review of the big climate funds, streamline processes, harmonize procedures, build in project preparation for countries to actually access with greater speed existing financing, huge priority. Private finance, Shamira said it all. I can't say much more other than to say it's a huge priority to get from words to real action. We need guarantees, we need securitization, originate to share models, foreign exchange work, and policy work, because that remains the biggest concern for investor. It's the country risk, not the project risk. We can't forget that. Domestic resource mobilization, Odile was very eloquent on that, so I won't belabor that. Policy, Nick, you talked about. I just want to highlight the potential of repurposing fossil fuel subsidies and the amount of money that's there. We need to talk about that more. Technology, particularly for countries that still face an energy access challenge, we need to be able to speed up the adaptation of new technologies across all countries of the world, including emerging markets, and get the price points to be reduced as quickly as possible. That's part of the equation. And then finally, I asked Nick, can we get there? He said we can, but will we? So the optimist part is that we can, but we need political will, we need the leadership. I think there is momentum, it's in our hands, we cannot fail.
Thank you, Alexia. I have Axel and then Isabella, and then I think we're going to get chucked out. So please, 2 minutes. Thank you.
Much. I think these recommendations we fully subscribe, as well as those by Anki Singh and Larry Summers in the report to the G20. I think what they all show is that massive amounts of money are necessary, and we have identified things what we can do, and we will act. That allows, and as Alexis said, that we can increase it. But these increases are not going to be enough. And I think there are hard questions to be asked. What are we going to do with the difference? Because this is the challenge, namely, for governments to say, if we agree with the analysis provided by Larry Summers, Anki Singh, or by Nick, then how do we want to act on this? One is, of course, the private sector. There are incentives, and we should be acting on it from guarantees, de-risking, etc. But there is also a part on the public banks. How much do you ultimately want MDBs to do? Is that the current measure plus the CAF measures identified? Or do you want to have a delta? That is what the membership should discuss and say, what should we do? Secondly, on concessional financing, let's be here very clear. Concessional financing is falling to developing countries. Yes, there are higher amounts of ODA, but the ODA is redirected to in-country refugee costs, humanitarian support, and some countries that are in war. And so the in-country refugee costs are now higher than what is going to sub-Saharan Africa. So when we are talking about a continent that is disproportionately affected by climate change, we have to be clear that they need more resources. And I think we need to be loud and clear, and I think this type of meetings, apart from that we say what we need in the future, these countries will need it now. And that is where I think we need to actually to rally support for, and it is not only for the concessional windows, but this is what we need to do so that they can do the minimum work on climate as well as development. Thank you.
Thank you very much for keeping to time. I'm going to head over to the co-chair of the International Resource Panel, Isabella Teixeira. I'd also like to welcome the high-level champion, Mahmoud, who might make some comments. And I know Naoko Ishii might make some comments about a nature finance report. So I'm going to leave you in the capable hands of Amar, and my apologies, but I don't want to contribute to late lists on the Al-Waha stage, so I'm going to be there on time. So it's been a real pleasure to be here, and congratulations on the report. And thank you very much, everyone.
Isabella? Yeah.
I have 2 minutes, I understand. Yes. Thank you very much for everyone. I'm not an economist. It was a hard task to join you. But I think that to have something very important to observe concerning the report in the next 2 years. This report is important not only for COPs, but also for process outside the COPs. And next year, you have my country under leadership of G20, and by 2025, under leadership of COP30. And after this, we have BRICS Plus meeting. So I think that it's very important for us that you can come together with the report concerning climate, nature, because you finance nature loss today. You don't finance nature value today. That's why you have new report that's coming that Naoko is sharing with us. And we need to come together with development finance. For developing world, we need to put things together. And that's why I like to much how Alex on World Bank mentioned here, the complex world, the concrete world that we need to manage at the political perspective. So if we want, and we need to run solutions in short-term perspectives, we need to understand how to have investment returns when we go into climate, nature, and development. And this means that we need to approach competitiveness. And we need to approach competitiveness. We need to understand that our products, our values, we must deal with incentives or subsidies. So it's really hard when you have countries that don't have alternative for phasing out, for example, fossil fuels. I have come from a country that the energy mix is based on 92% of renewable energy. 92%. Give another country that has this. So let's act in short-term perspectives. I try to provoke here. We need to understand or to discuss better how climate and finance should come together, climate and nature should come together, and how we can provoke a phasing out of bad subsidies, targets like 30% in the next 10 years, and a phasing up of the green incentives to make sure that the investors should come based on a pragmatic approach and to run the new direction. If not, it is still what have been done in the last, 10 years or 15 years. It is absolutely clear that climate diplomacy is not enough to address the concrete road that the global society is requiring to do. So let's move the pieces together, and I'm convinced let's welcome to Brazil the next 2 years, and let's try to change the world. Thank you very much.
Now, if I could give you the floor, but just for a minute or so. Yeah, thank you.
Yeah, just following the Isabella, who did so good at in casting a vote, my vote on behalf of nature or natural capital. We are in climate crisis, but the climate crisis is a part of the bigger crisis of natural capital, nature crisis, water crisis, and the systemic crisis. So in order to really get the bottom to get out of how to do this economic system transformation, which we have been talking about, I think we need to find a way to how to value the natural capital or the nature, the asset we all have. And as of today, that most of the natural asset is actually held by Global South. So if we find a good way to value the true cost, true value of natural asset, and if we make it investable, this is very good way to actually reward those people who safeguard the natural capital, be it smallholder farmers, the indigenous people and local community, the forest people, and the fishery people. So this is actually the one way to address so many crisis points, not only climate crisis, water crisis, nature crisis, and the division between Global South and Global North. Thank you so much. And this is a report. Isabella, Vera, I, And the 3 other women actually did it and published this morning. We will send that on a link to everyone. Thank you.
Thank you, Naoko. I do apologize that, given the time, we can't open the space, but we are privileged to have 2 people round this out. Mahmoud, Nick started by acknowledging your role in this effort, and so it's only appropriate that you make the closing remarks together with Vera. So, floor is yours.
Right. Thank you so much. I'll be very brief because I've been referring to this report for many times, including today. This is the 7th time I'm referring to the report. So congratulations, Nick, Vera, and everybody, and of course to you, Ammar. So few things. I think of the benefits of this report. You started last year by identifying the gaps. This year, you are telling us how to close the gaps, and the excellent declaration by the UE is very much based on this evidence-based approach that you dealt with at the global level. You will find this report reflected, I hope this is the next step, in plans at the country level. Plans are important, but as we are all reminded by Eisenhower, that planning is more important. In practice, implementation is even more than planning itself. And here we'll be getting a lot of issues that Alexia mentioned about the capacity and the roles of the MDBs and how to do a better job in the implementation. And I think your report as well helped us a great deal in dealing with 3 kinds of false dichotomies that the COP process, development, SDGs have been suffering from. Everybody now is saying since last year that climate action is development action within the SDGs. Climate finance is development finance. You have been saying that, to your credit, Nick, for many years, but now to have it in this audience that in the past, some of them consider as a kind of heresy, to consider that now this is the common sense, and I'm seeing more SDG spins than normal, especially in this kind of platform. The second one, many institutions, unfortunately, wasted too much time in unnecessary tension between what's so-called GPGs, the global public goods, versus the country platforms. You cannot fix global public bads or deal with global public goods until you have serious action at the national and local level. And you mentioned that in different ways, and many thanks to refer to many of the issues that we started, including building up pipeline of bankable and investable projects and dealing with business environment as we do. There are 2 approaches, and I'm happy that there is a great deal of convergence now between having a list of prerequisites before we get engaged in investments, or reform as you go, as it happened, for instance, in the case of Egypt and Morocco in big projects. When investors come, they would ask for some reasonable requests, like offtake agreements, like tariff reforms, and then you will get the beauty of partnerships in practice. Here, the dangerous part is, and it's good that Alexia in particular mentioned the importance of political leadership and political will, because it's very much interlinked kind of approach. You cannot solve part of the puzzle without the rest. I was in a meeting with GFANs. They are assuming that they are going to be de-risked, leveraged, supported with toolkits of instruments by the MDBs. MDBs, and I had the honor to work on one of them for 10 years, and many friends, including Axel, until now as a friend, I would say, and he would agree with me, that capital, quoting the president of the bank, available now to the World Bank, is not leveraging what it has, including knowledge, including technical assistance, including capacity to help. For the ministers like Minister Rania, they are not really with the same kind of flexibility to tap into this concessional resource, coming with technical assistance and knowledge as her predecessors 20 years ago or 15 years ago. This needs to change, and yes, and the reports by the CAF, the reports coming from the G20 are talking about efficiency, but at the same time, squeezing the lemons is fantastic, but more lemons in the system are required in order to do what we have to do. I think we are aiming for the following, and this is the practical next step. For next year, this is the year, as you know, after finishing with the global stock take here in the UAE, next year is going to be the COP talking about the next finance, the next 100 billion. And more important than the number is the methodology and standards that are going to be used. The following year, everybody's talking about it from now in Brazil. Is good that Isabel is here, because that will be the year of NDCs, that should be more ambitious, more comprehensive, more evidence-based at the national level. Of course, you can continue doing the fantastic work and role that you are doing in the global leadership, but that needs to be cascaded at the country level. I hope that countries, including from Egypt and many African countries around the table, let's take this report, do the national version of it, perhaps with the same methodology, to see how this kind of work from the DRM through the integrated national financial framework, put it in the context of development finance with impact, get what is needed to be done from the private sector, external finance, in order to do what we should really be doing. Yes, we have to open another session. Thank you so much, Vera, for this reminder. But many thanks to you, many thanks to the UAE for continuing the great job. Thank you.
Thank you. Vera, thank you for your leadership. It's only appropriate you get the last word.
I can never get the last word after Mahmoud. Mahmoud is the last word. But I think that shows a little bit the leadership that we got from Egypt that really started this process, and from the UK, and the continuity with the UAE. And now the UAE has put some resources together. We used to say that investments are too low and going to the wrong places. I think we do now have the investments with the Altera announcement. We have a sense of what places they should be going to from the report and the nature report. So hopefully in 2 years when we get to Brazil, we can begin to see whether Altera is delivering and our report is implementing with acceleration. Thank you very much for coming, and we look forward to working all together to make sure that by the time we get to Brazil, we're now talking about we have gone to scale and we're working at speed to deliver on the agenda. Thank you.
Thank you.